Tame came to my public. This is Raashii Solankii by your side to make your accounting concepts clear. And here we go today. Today I'll be teaching you the difference between reserves and provision. So first of all, you must know that we have already covered the concept of reserves in our first part. We have already covered the concept of reserves in our first part, and provisions concept in our second part. So I'll be providing you the link of those two videos in description. Please do check it out. And now we are gonna be learning difference, which I have told you that only once I finish you making understand what reserve is, and then I'll make you understand what provision is. After that only I'll touch this topic. So now you guys are clear with the concept of reserves individually and provision individually. So now we can compare it, and it will be very easy for you to get to know about all the differences because we have already understood that differences in this part. Okay. So as we know, what are reserves? They are accumulated profit or undistributed profit to strengthen the financial position of the business and kept aside. They are undistributed or accumulated profit to strengthen the financial position and to meet the unknown liability. Whereas provisions are for the specific liability or contingencies, for example, doubtful debts. For example, there might be bad debts. So, provision related to that. Second, reserves are made out of profit only. But provisions are made irrespective you earn profit or loss. Provisions and reserves, they both amongst them, reserves can be used in distribution of dividend, but provisions cannot be used in distribution of dividend because it is for a specific purpose. So it will only be used for the purpose for which it is created and not for any other purpose. But here the purpose is not certain. The purpose is not certain, so it can be used in distribution of dividend. And since it is dependent on reserves are dependent on profit, it is created by debiting P&L account, and provisions are not dependent on profit, it is created using P&L account. Now it is not mandatory to create reserve because there is no specific reason for you. I just created it at random so that if any future contingencies that may occur, you are prudent now, you are conservative now. But here you are needed, you are in a situation where you have to create this because you have a probable obligation that may arise in future of whose amount is not certain but occurrence is certain at some point of time. So that's why it's mandatory and should be used for that specific purpose only and not for any other purpose. Shown in the liability side of the balance sheet, added in capital, by the way, you must know. And this is shown. See how it goes is, it is basically once you create a reserves profit after tax, then you will do less, transfer to reserve. For example, general reserve, for example, you have profit after tax of 5 lakh, transfer to reserve is 1 lakh, then this 4 lakh balance goes to capital account, addition in capital account. Whereas this 1 lakh is shown in the liability side of the balance sheet. Liability side of balance sheet. And in reserves, this is about reserves, and in provision, they are either shown in the liability side of the balance sheet or as deduction of the concerned asset. For example, this was for the example of provision. Sorry, this was for the example of reserves. Now for the provisions, example is like if I have debtors here, for example, debtors of 5 lakh less doubtful debt, provision for doubtful debt 1 lakh, then net balance, net debtors 4 lakh. So this is what you'll show in your balance sheet asset side, and in the liability side as usual in case of provision for legal case and all. So you got that. Chalo then, tata, bye bye, have a good day.